What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this evening. So what we're going to be talking about in this update is a little bit of technical analysis on AMC and just potentially what we could see going into next week's trading week. Now, in addition to this, we also have to cover the Ortex updates on both AMC and GME, the short interest, the utilization, the cost to borrow, what is going on with these numbers. Now, in addition, everybody has kind of seen the craziness that's been going on with the option chain for AMC. Now, since all of these weeks, in the past, this previous week, and the week before have been weekly options expiration dates, we typically wouldn't expect to see that crazy of an amount of open interest and volume on the option chain. But that's not what we were seeing. We are seeing a lot of interest on the option chain for AMC. This leads to the potential for pretty significant gamma squeezes to happen if the options chain is set up in a very specific way, and that's what we're going to be covering in that part of the video. But one of the most important things that I want to kind of explain to everybody in this update is the concept of forced share recalls. Now, a lot of people have been talking about what's been going on with this GameStop situation, their stock split in the form of a stock dividend, and how this could possibly lead to massive widespread forced share recalls for GME. Now, when we think about what's going on with GME, we've seen this many, many times in the past. When GME runs, AMC typically runs as well. When AMC runs, GME typically runs as well. These stocks are pretty much linked together. There's a couple of other stocks in there as well. So anything good happening for one of these stocks is going to be beneficial for the other ones as well. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. And I know you guys have been seeing it, the success that people have been having with the 1348 strategy that revolves around those 13 and 48 EMA crossovers. If you do want to learn more about that, or if you just want free alerts on about 200 stocks right now on the 4-hour time frame, make sure you check out that link down below in the description to the Discord. We are rolling out earnings alerts for you guys in premium. You get 20 private live streams every single month. You also get the day trade alerts on 350 stocks on a 3-minute time frame. If you're willing to take it seriously, make sure you check that out. So AMC closed the day on Friday at $23.30. That is not really what we wanted to see at all, down 5%, especially after the news that came out in the after hours trading period on Thursday. But I want to point you guys something very, very interesting. So when we're looking at this chart on the left for AMC, this is the chart now. This is the 4-hour chart that we are seeing right now. In this section of the 4-hour chart was right before the massive June run-up. Now, I'm not saying that this is exactly what's going to play out, but these charts look very, very similar. When we see this chart for AMC right here, we see a break over the 200 EMA, little bit of consolidation, a very significant run-up. Then it comes down and kind of hovers and consolidates at this 48 EMA on the 4-hour. But what did we see before June? We see a break out above that 200 EMA, a run up, little bit of consolidation, another run up, and comes down and consolidates at that 48 EMA just before you go on an absolute moon mission to all-time highs. So I know a lot of people were kind of hoping that we were going to go directly up in a straight line to all-time highs this week. That's very, very hard for stocks to do. They are going to need to have a little bit of a cool-off period before they continue back to the upside. And when we think about where AMC was over the last couple of weeks, we were just at $12.90. We started the week around 20. We closed at 23.30. In my opinion, that is a win. Now, coming over to the Ortex updates over here, we've got AMC still at 100% utilization according to Ortex. I don't necessarily think it is at this point still, just because when we look at these numbers right here, let me uncheck a couple of these, and we look at shares on loan. The shares on loan has been much higher in the past. You can see here 148 million. You see 152 million right here. And that was right around when we were seeing that true 100% utilization. And you're also seeing the cost to borrow not really step up any significant amount, really above 10% yet on AMC. In order to get there, this shares on loan number right here, which is sitting at about 135 million, is going to need to get above 140 million, which they're most likely going to continue to do when they're trying to push the share price of this thing down. Now, we also have 20.7% estimated short interest and 106.68 million shares estimated to be sold short right now. When we come over to GameStop, though, we've got 22.58% estimated short interest. Very, very high. We have 9.33% average cost to borrow. We've got 15.84% max cost to borrow. These numbers are very, very, very significant. When you see cost to borrow like this is going to really put a lot of pressure on those existing shorts that have been in this thing for a long time. Now, we're going to cover the options at the end of this video, but I do want to go over what is going on with these forced share recalls. The first thing that I really want to get through everybody's head is a forced share recall or a share recall is not done by the company itself. It's not done by AMC. It's not done by GME. They are not the ones loaning out these shares, so they are not the ones that can recall them. The ones who can recall these shares are the lenders of these securities. So the big prime brokerage institutions, Goldman Sachs, JP Morgan, or a big financial institution that generates a lot of extra income off of share lending, potentially BlackRock or Vanguard, can do something like this. So the first thing I want to kind of go over with you guys to kind of give you a little bit of a background is just what's going on with this GME situation right here. So essentially what they're going to be doing for an increase in the number of authorized shares of Class A common stock from 300 million to a billion through an amendment to the company's third amended and restated certificate of incorporation in order to implement, here we go, a stock split of the company's Class A common stock in the form of a stock dividend. Now, everybody knows this right now. This is what we saw in the after hours on Thursday. We saw a very significant run up and everybody was really excited about this. Now, things started to kind of pop up that this could cause a forced share recall. Now, why might that be? So the first thing that we kind of need to figure out here is what happens when you are short a stock when a dividend gets paid out. If an investor is short a stock on the record date, they are not entitled to the dividend. In fact, the investor is instead responsible for paying the dividend owed to the lender of the shorted stock that they borrowed. Investors short stock if they expect it to decline in value. So typically, what companies are going to do is they're going to issue a cash dividend. Now, when you think about the mechanics of paying out a cash dividend, if you are short a stock, it's pretty easy. All you got to do, take some cash, pay it out, and you're good to go and you can keep your short position. But what exactly is a stock dividend? Well, when we come over here, a stock dividend is a dividend payment to shareholders that is made in shares rather than cash. Well, how are the shorts going to pay a dividend in shares if they technically do not have any real shares that they can pay out to issue to new shareholders? It's a mechanical issue right here. It's very similar to that NFT crypto dividend that Overstock is doing. A stock dividend or an NFT dividend are going to have sort of similar effects, most likely when this thing starts to play out. The one thing about this share recall situation that not a lot of people really understand or really know right now is that if this share recall and the way that this stock split, stock dividend situation is set up is actually going to come out and force a share recall. But when you take a look at Ryan Cohen's previous tweets, he's kind of been taking shots at short sellers, consulting groups, and if GameStop really just wanted to do a stock split, they just would have done a normal stock split where the shares that you have kind of get divided. If it was a 1-for-4 split or a 4-for-1 split, I forget how it's called, but your one share would then turn into 4 shares and the company's share price would go down. If that was essentially what they wanted to do, then that's what they would have done, but they didn't. So this is going to be something that a lot of people really need to focus in on going forward. Now, additionally, this is more geared towards GME right here, this forced share recall. But if you go back and kind of think about the videos and the information that I've given you guys in the past, and you remember that Notre Dame research report? Well, when companies have utilization over 75%, there's a 1 in 26 chance every single day that there's going to be a forced share recall issued out just because of the amount of shorting and the potential increase in the cost to borrow in these stocks. So it's still possible for AMC once we see the cost to borrow really start to get up and really start to see that utilization get to that true 100% utilization when those shares on loan really start to get up. Now, this video is not meant at all to say, oh man, GME's the play, AMC's the play. Not at all. What we're looking at here is one of these stocks is getting really, really solid news, and the implications of that news are going to affect both stocks. So I want to make that clear to everybody. Now, let's talk briefly about the options chain for AMC going into next week. So next week right here, April 8th, we are going to have 17,895 call contracts in the money. And right now we have 11,157 puts. So right now, if there's going to be any market maker hedging, it's going to be more geared towards the call side, which they're going to have a net buy of shares if they are going to be hedging these contracts. We're going to have to worry about max pain again, because remember, as we talk about max pain, we look at it as a range, because if it's trading within a certain range, a percentage of max pain, well, they can just sell offsetting contracts on the other side. So they could sell puts to offset the calls, they could sell calls to offset the puts, in order to not actually have to go out in the open market and buy or short shares to hedge the options that they are selling. But let's take a quick look at the actual option chain for AMC going into next week. And this is going to be April 8th right here. So there's nothing really crazy jumping out at me right now except for this $25 strike, which is most likely going to start seeing a decent increase in volume and open interest. But the thing I want to have everybody keep in mind is really how options are affecting price movement. In the money and at the money options are going to be the main drivers of price action, because those are going to be the contracts that the market makers have to buy the most amount of shares on. These YOLO options all the way out, especially on a weekly basis, are really not helping the squeeze all that much. And they're really benefiting the market makers in a significant way. So I just want to have you guys keep that in mind. So that is going to wrap up this update on AMC and GME and this potential for a forced share recall situation. If you enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So I hope you guys are having a great weekend, and I'll see you guys in the next video.